Happy Friday, ladies and gentlemen, all in crypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And if you are new around here and you find yourself on my channel for the first time today, don't forget to check out that subscribe button, because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening in the crypto space, but also the broader market. And that is exactly my intentions with this video. I want to start the video off by offering perhaps a unique insight into the cryptocurrency market and space more generally from somebody like myself, who, when it comes to certain altcoin projects, gets the most viewed content on YouTube in relation to those projects on a consistent basis. And you can go and check those numbers out for yourself when we're talking about projects like Hedera Hashgraph, ICP, even recently XRP, things like Polkadot, Cardano. If you look at the content that we put out, it is some of the most viewed content in regards to those subject matters. And why am I bringing this up? Am I bringing this up to brag? No. We don't need to brag in regards to that. You know, it's something we're very proud of, being somebody that people come to for information in regards to these projects. And as these projects grow, as the market will eventually improve, and this is why I'm bringing this up, because of where the market's kind of at right now and the fatigue that people are feeling, will grow with these. And we're very happy to be in that sort of spot for in regards to being somewhere that people come for information on these. But the reason that I bring this up is because I think there's a lot of fatigue in regards to the cryptocurrency space. And certainly when we're talking about altcoins like the ones that I've just mentioned, there's many out there. Chainlink is one that we're very popular on as well. It has, I think, the lack of market action, certainly in regards to these altcoins, is really coming off the back end of a complete lack of interest. And this is the unique insight that I want to offer people in regards to the position that I'm in here at ALLIncrypto. And, you know, we love you guys. This is why we set the channel up. Nobody's that interested. So if we do, for example, some of our XRP videos have got nearly 60,000 views on them. That's quite a lot of views, right? In regards to crypto, it's certainly a lot more than a lot of other people that cover the subject matter get. However, even 60,000 views in the grand scheme of the 2.1 billion users that YouTube has monthly globally, it is nothing. And if you think about 60,000 and there's 8 billion people out there, the interest for crypto is, it's just not there in regards to many of these altcoin projects. And XRP is a very zealously watched topic, whereas something like Hedera, for example, anything between 10 to 20k. Go and look at the average views on Hedera content, by the way. We will come up if you type in Hedera Hashgraph HBAR, and we'll be one of the top ones, certainly one of the top viewed. Anywhere from 10 to 20k is a really good viewership for us. Think about 10 to 20k. YouTube is probably one of the number one places to get crypto information. It's an amazing platform that is going to engulf broadcasting, and already is. Think about 10 to 20k in the grand scheme of the amount of people that are out there, or just in YouTube's case, the 2.1 billion users. So really what I'm highlighting here is the fact that people just really aren't that interested in crypto right now. And you can derive that from Google Trends. A lot of the price action that we've seen and the uplifting in the market that we've seen has came really from institutions. And this is why you see the likes of Solana doing very well, Ethereum doing well, and Bitcoin doing well, and the rest of the kind of altcoin market very much lagging. But they are going to have their day in the sun. If you look at when Bitcoin dominance typically rolls, it's round about when Bitcoin is at its all-time high levels. And we're ahead of schedule massively. There's nothing out of the ordinary here. However, I do notice the fatigue. I do notice people get rather angry, certainly when things aren't doing things in the way that they wanted them to. We've been very right on the markets thus far. In relation to altcoins, they're taking a little bit longer to sort of many of them get out of this kind of base of accumulation. I think we've had the first sign that they are coming out of them, the kind of first yawn of spring, if you will. But hang in there, guys. Now, in my opinion, this is not financial advice, is the perfect time to be in the cryptocurrency market. You don't want to be in it when everybody else is. When your barber's talking to you about Dogecoin because he saw Elon Musk on the Super Bowl, that was the worst time to get in. You want to be in it when people aren't interested in it, and that is the point that we are at currently, and technically, things look absolutely fantastic. We are in a bull market for the space broadly. A lot of altcoins out there that we've just spoken about that have low interest, they're still in this kind of accumulation, sort of made that first little leg. We're seeing a little bit of volume come back. They pulled back with the space generally. the next sort of move ahead of us is upon us, in our opinion. And we can derive that from things like the total market cap, excluding Bitcoin, total 2, and how we believe that's going to $3.8 trillion, and we're forming that right shoulder. We're waiting to break that. Bitcoin's currently in that broadening channel that it's waiting to sort of break out of. If you look at our ETPs, our exchange-traded products, they're also forming a right shoulder. We're just ready to initiate that next move. And there's chop and volatility that comes on the back end of that. There's a lot of things happening internally with the cryptocurrency space that are sort of weighing things down. And also we're a part of that macroeconomic picture. And I think Jerome, certainly the stock market, kind of went, oh, he was a little bit more hawkish, a little bit less forthcoming than we thought he would be with the possibility of rate cuts, even though it's very likely that we're going to get them. So I know I've spent 5 minutes talking about this, but I want to offer that insight into you as a content creator. I can talk about this, right? We can talk. We love what we do here. We're extremely fortunate, and we want to share as much insight with you guys as we possibly can. And an insight that we can derive is that there's just no interest in crypto. The bad news is exactly that. The good news is there will be. This technology, ladies and gentlemen, finds itself at the convergence of not just the financial industry, AI, identity, social sort of industries, governments. Everything is going to have a blockchain element in it, and the world just doesn't realize that yet. However, the projects, despite the price action, have been working and actually gaining ground in the fields that they're looking to do that in. And I'm very bullish on sort of the merge of AI and blockchain, and my portfolio definitely reflects that. We're very largely in deep in AI because we think it's pretty huge. But that's enough of me rambling on. Now we've offered the insight. Let's break a few things down and get into what we have to share with you today. Today, obviously, we've got non-farm payroll. So JP sort of put a bit of a pep back in the dollar's step. So those of you that follow me regularly know we've got this really sort of broad trajectory for the dollar coming down into the sort of high 90s. We're just waiting for the kind of break here. This break is likely going to coincide with a break up that we're looking for in the likes of this right shoulder for total 2 that takes us to $3.8 trillion. Others, again, in a right shoulder. A lot of a kind of falling wedge-esque nature in these. Certainly when I look at altcoins also. So I think we're really just looking for the dollar to roll, and that's going to sort of trigger lots of things. I mean, Hedera, for example, getting very tight. We did a very similar thing, but we'll do a video, by the way, today, guys. Lots of people asking me on Hedera Hashgraph and its price. You know, we know the score with Bitcoin. Look at where it bounced. We're just waiting for that kind of rolling of the dollar, and the stock market getting hit particularly hard. Its earnings, we were always going to get that volatility. By the way, Tesla for me is a buy here because we've got a price prediction of nearly over a doubling at this point of Tesla, and I'll be making a video on that separately. I know there's a lot of you out there that play perhaps more so in the traditional markets, but you're interested in crypto because you should be, because it's going to offer the best ROI, in my opinion, if you get the right coins. In what's a genuinely bullish environment for things across the board. But we will cover a lot more stuff. That video that we did on UK housing is blown up now. You know, certainly when you compare it to other people that make content on kind of the UK housing market. And again, we can use our sort of technical skills, our technical superpowers for more than just crypto. So it's non-farm today. We've got a lot to contend with. You know, I'm really just waiting for the dollar to roll and this to sort of trigger. Jerome Powell very much saying he's looking for CPI data and things like this to confirm it before the next meeting, before the cut. And I think that kind of, the markets took a bit of a step back there. However, they are going to be lowering rates. You know, this is 10-year government bonds that is throwing it down at the moment. Dollar's very sort of heavily correlated to this. We knew this was going to happen because we had that bullish divergence or bearish divergence. You can see how this is sort of chucking it down. Also 2 years. And of course, rates follow this, and we know what happens when rates come down. The Dixie comes down, and we're seeing like we've got targets against the dollar for Great British Pound to do well against the dollar and euro, and of course the yen with their sort of tinkering with interest rates. And that's why the yen's called the widowmaker trade, because it just makes so many widows, because it's an obvious short, right? Until it isn't. Until the Bank of Japan do something funky and intervene. And, you know, that's why it's called the widowmaker. There's a lot going on internally with crypto. So obviously we had, let's start here, the Ethereum ETF launch. We saw the very same thing, and we are seeing the very same thing with the ETH ETF launch. And we're using BlackRock's iShares ETH Trust that we saw with the Bitcoin Trust. And a lot of this has to do with the sell pressure that's always caused by Grayscale. because they had a trust. By the way, we got the targets on Bitcoin right, then we got the targets on Ethereum right. Now we're looking for the targets on the large caps. It's kind of the flow of money, a technical representation of the flow of money. Because basically what happens is they have this trust, they have all this Bitcoin that they then need to sell and convert into the ETH ETF. And that causes a lot of sell pressure. And recently they've launched a new product that essentially is a mini Bitcoin trust. And this launched Wednesday, and this is essentially to sort of reduce the fees, if you will. You can see a deeper look at Grayscale's spin-off ETF launch. Grayscale's BTC launch came 8 days after the firm's launched its Ethereum mini ETF. It offers a 0.15 fee and similar relationship to asset manager's flagship Ethereum trust ETH. While ETH watched about $2 billion of investor capital exit the fund, it's now trading positive again with inflows. So it's now got a net inflows of... Grayscale have been a pain in the backside, and they still are. And this is obviously affecting the price. But the good news here is Bitcoin, after it had this initial sell-off on the launch and sort of Grayscale's interference, went on and did an 80% run or 90% run. I think Ethereum is going to do a significantly larger run than that to the upside. That's going to coincide with total 2 breaking to the upside from that right shoulder. Others, and of course all the ETPs that we're looking at. So Grayscale are a part of this. It's going to be interesting to see what comes out non-farm today and how that affects the dollar. Coinbase had really good earnings, but actually still chucking it down. I didn't want to see this, but I still do think this is going to result in upside. I think you're just getting sort of shaken out here. What are we talking about? We were talking about Grayscale Digital Large Cap Trust. So Ethereum likely going to do a very similar run to what we saw with Bitcoin after it had its initial sell-off due to Grayscale and the kind of broader trends being set in place. This isn't bad structure. This is very much just a pullback that I believe is going to result in upside. And of course, we also have to contend with what's taking place with the stock market. Now, there's a lot of earnings going on there. There's also, again, Jerome Powell not being as forthcoming with interest rates as we thought he would be on Wednesday. They will lower rates. We're 100% certain on that. I want to deal with this, actually, because whenever I talk about they're going to lower rates, there's always the bears that have, by the way, been totally wrong for so long now. We were bears in 2022, and we pivoted bullish at the start of literally the perfect bottom for Bitcoin. But the bears seem to just keep doubling down on every reason that they can possibly imagine. The bearish comment is, okay, and I used to believe this before I used my brain and actually looked at it. They say, every time they lower interest rates, this is a popular fallacy that is thrown around, and it's like Chinese whispers, it's just regurgitated. Somebody said it somewhere because they looked at 2 times out of the last 5, and now everyone believes it. A pivot has been bad for the markets in certain situations. But is a pivot a death sentence? No, actually, in some cases, a pivot has led to an insane market rally. We're going to show you that right now. We're going to show you a chart, which you cannot argue with, I'm afraid, guys. Because there's still, and I've done this 1,000,001 times, there's still people out there that fight me on this. And I just say to them, go and look at the chart. Don't take my word for it. Everything we say here on Allincrypto, we should be able to back up. If we can't, you shouldn't listen to us. It's that simple. Okay, so here we have pivots. This was the last pivot that we saw back in 2019. This pivot occurred, and then the market went on this rally subsequently after. Yes, there was a crash, but it didn't come till significantly later on down the line, nearly just under a year later. So imagine they pivot now, you might have a year's grace period. That would kind of align with what we're looking at in regards to 2025. It's important for me to do this because there's so many misconceptions. My job is, I love my job, but it's often very hard because everyone has an opinion on the markets. All I'm saying is, show me why you think what you think. And if I agree with you, I agree with you. If I don't, I don't. And we'll go from there. You know, if we were a bear, we'd be a bear, right? Because we'd have reason to expect the markets to come down. We don't just regurgitate nonsense. And you got to just check this stuff out for yourself, for goodness sake. So a crash did come. I guess this is what people are talking about. But you could say, well, there's going to be a crash. And then you could wait 5 years and go, and then there's a crash. And you go, yeah, I told you there was going to be a crash. So like Dan Pena or Robert Kiyosaki, this mother of all crashes that I do think is coming, they've been talking about for 20, 30 years. You can't say, I was right on that. It was obvious. This timing is everything in markets. What are you going to do, sit out of the markets for 30 years? Because you're waiting for the crash? Anyway, enough of the ranting. You can see here, yes, this did lead to a crash, but it wasn't until later on down the line. So we've looked at 2 pivots. We'll give you that one. This one was a bad sign because obviously the housing market and everything that went on there. This one wasn't. So 1-1 in regards to a pivot being bad for the markets. Then we have the dot-com boom and subsequent bust, right? So it's now 2-1 to the every time they lower rates, the markets crash side. But it's not every time still. We've already proven that. Here, they lower rates again. So this is when they pivoted back in the 1995s. The market went on an insane rally as a result of that. Again, here we have another pivot. Rates go up. Then they pivot them. The market, even in the short term, rallied for nearly a year. And then there was a correction. So I think we're kind of proving the point here. Again, a very steep pivot. Look at what the market did. It went on an insane rally. So this notion you can now dismiss, and I'm sure there's going to be someone, that a pivot is negative for the markets. It can be under a certain set of circumstances. What you don't want to become is one of these people that say, oh, well, this happened that time, so it's going to happen this time. Okay, if it happened 10 out of 10 times last time this happened, like the yield curve, yeah, sure. But don't just assume something under a totally different set of circumstances. There's been a number of things we've dismissed. One was that the markets were going to crash when they hit the debt ceiling because that's what happened whenever it was back in or what we saw happening in 2020. People say, well, the signs of that happened in 2019 because there was a reverse repo and where that was at. And the other one is the 1970s style inflation. We're not in the 1970s. Okay, so just to dismiss that. But to go back to the point I was initially making, stock market selling off. Stock market has been doing extremely well. We think it's going to continue to do very well. Again, talking about Amazon, talking about Tesla, we've got a lot higher targets for that. You're in a very, very strong uptrend here. And I do believe this is going to continue. You are going to have corrections along the way. And I think this is going to be a correction until proven otherwise. Lots of our targets met for the stock market. DAX not liking this too much. This made our target. And look at where it's pulling in and around. We are very bullish on Tesla. Amazon was another one that we are getting to. Ooh, although look at this pre-market. Wow. That's a significant hit. So stock market pulling back significantly. Of course, this is going to lean on the cryptocurrency space. The question you've got to ask yourself is, what's the broader trend? Is this going to be a bullish environment or a bearish environment for risks? We've derived it's going to be a bullish environment. And that's it from me. We've gone on for 19 or 18 minutes now. Guys, I'm going to love and leave you on that note. Thanks a lot for watching. I'll see you all in the next one.